Imagine a future where you don't need a bank to send money, where loans, investments, and even your paycheck run through blockchain technology instead of Wall Street. That's not science fiction, it's already happening. The rise of cryptocurrency and decentralized finance, or DeFi, is reshaping the entire financial system. And if you understand it early, you could position yourself to build serious wealth in the next decade. But if you ignore it, you risk being left behind. Today, we're rediving into the future of finance in the crypto era and how you can get ahead of the curve. Here in the US, most of us rely on traditional banks, credit cards, and stock markets to manage our money. But those systems are slow, expensive, and controlled by a handful of powerful institutions. Meanwhile, crypto is introducing something radically different: decentralization. That means fewer middlemen, faster transactions, and global access. From Bitcoin being called digital gold to Ethereum powering smart contracts, crypto is building a parallel financial world. The question is, how can you, as an everyday American, use it to grow your wealth without falling for hype and scams? That's what we'll break down step by step. So first, let's understand the shift. Traditional finance relies on intermediaries, banks to hold your money, Visa to process payments, and brokers to buy stocks. In the crypto era, blockchain replaces these middlemen with code. Peer-to-peer transactions mean you can send money to anyone, anywhere in the world, in minutes, with much lower fees. And then you have smart contracts. These are basically self-executing agreements written in code that are starting to replace lawyers and brokers in many deals. This isn't just about digital coins, it's about a completely new financial infrastructure that could disrupt everything from mortgages to stock trading. The wealthy recognize shifts like this early and position themselves ahead of the masses. They see where the puck is going, not where it is. Let's talk about Bitcoin first. You've probably heard it called digital gold, and there's a good reason for that. It has a limited supply. Only 21 million coins will ever exist. Just like gold, this scarcity makes it resistant to inflation. In fact, many American investors now use Bitcoin as a hedge against the dollar losing value, especially as we see inflation numbers rise. It's not just individuals either. Large institutions like Tesla, MicroStrategy, and even some major hedge funds are holding Bitcoin as part of their reserves. For wealth building, this means you should consider Bitcoin not as a get-rich-quick scheme, but as a long-term store of value, a piece of your portfolio, just like gold or real estate. It's about preserving and growing wealth over time. Now Ethereum takes things a giant leap further. It's not just digital money, it's a platform for building financial apps without banks. This is what we call DeFi, or decentralized finance. Think about getting a loan, lending out your money, or earning interest without ever stepping into a Wells Fargo or Chase. Instead, you interact directly with code on the blockchain. Some DeFi platforms are already letting you earn higher interest rates on your savings than any traditional bank account could offer. But here's the key, and you need to hear this: there is risk. These platforms are new, sometimes unregulated, and can be vulnerable to hacks. To build wealth smartly, you have to balance the incredible opportunity with a healthy dose of caution. One of the most practical innovations bridging the gap between traditional finance and crypto is stablecoins. These are cryptocurrencies tied to a stable asset, usually the US dollar. Think of coins like USDC or USDT. They give you the benefits of blockchain technology like lightning-fast speed and global transfers without the wild price swings of Bitcoin or Ethereum. For example, freelancers in other countries are already choosing to get paid in stablecoins instead of their local currency to protect their earnings. For Americans, stablecoins could mean faster payments, fewer bank fees, and a relatively safe way to experiment with crypto while avoiding the crazy volatility. It's like having digital dollars that you can send anywhere, anytime. Another huge part of the future of finance is something called tokenization. We've all seen the hype around NFTs, digital art and collectibles, but that's just scratching the surface. Imagine buying a fraction of a house, a tiny piece of a Picasso painting, or shares in a hit song's royalties, all on the blockchain. That's where tokenization is heading. It's about turning real-world assets into digital tokens. For wealth builders, this is a game changer. It means you get access to investments that were once only for the super. Instead of needing $100,000 to invest in a real estate project, you might be able to invest just $100 through a tokenized platform. This opens the door for everyday Americans to diversify their portfolios just like the wealthy do. Now, let us get real for a moment. The crypto era isn't all sunshine and rainbows. It's the Wild West in many ways. There are scams, rug pulls, and extreme volatility that can wipe out inexperienced investors in a flash. On top of that, US regulators are still figuring out how to handle crypto, whether it's the SEC, the IRS, or new legislation. And yes, you have to pay taxes on your crypto gains, and ignoring that can cost you big time. The key takeaway here is this: never invest more money than you can afford to lose. Diversify your investments, and always do your own research before putting your hard-earned dollars into any project. Wealthy people don't gamble, they make calculated decisions. So how do you actually prepare for this new financial era? First, and most importantly, educate yourself. Follow credible sources, not the hype you see on social media. Second, start small. Many Americans begin by allocating just 1 to 5% of their total portfolio to crypto, focusing on the more established projects like Bitcoin and Ethereum. Third, use regulated US exchanges like Coinbase or Gemini to reduce your risk. Fourth, you could consider opportunities like staking or yield farming, but only on trusted, well-vetted platforms. And most importantly, treat crypto as one part of a long-term diversified wealth strategy, alongside your stocks, real estate, and retirement accounts. Don't bet the farm on it, but don't ignore it either. The future of finance in the crypto era is already here. Whether it's Bitcoin acting as digital gold, Ethereum powering DeFi stablecoins, revolutionizing payments, or tokenized assets opening up new investment opportunities, the entire landscape is shifting fast. The people who truly build wealth in this new era won't be the ones chasing quick, speculative profits. They'll be the ones who take the time to understand the technology, manage their risks effectively, and position themselves for the long game. So ask yourself, will you be a passive observer of the future, or will you be an active participant? Because the choices you make today could define your financial freedom tomorrow. Thanks for watching. If you found this helpful, please hit that like button and subscribe for more content. See you in the next one.